Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio. What an exciting week this has been in a lot of different areas. Today, Wednesday, all the metals are popping up here nicely. Gold's up about $35 from last week. Silver's up about 3.5%. Platinum's up, back above 1,000, and palladium's up. So after the last couple of weeks of sideways trading, kind of nothing happening with the metals market, it's really nice to see a nice pop here with prices. And we can't say that we've fully broken out in any way with this nice pop with $35 higher on gold, but it is good to see it moving toward the breakout. I would put the breakout somewhere above 1,800, 1,825, 1,830, maybe as high as 1,840. Boy, I think when we break through that, you better be in. You better own metals because it's headed higher. Just the environment that we're in, Tori. Look at all these crazy things happening in the world, all the double standards out there, all the things that are just driving so much uncertainty. It's a matter of time. Metals are headed higher. This may be the start of it to where we're headed towards the breakout. We'll see in the next few weeks, but this is a nice sign to see gold pushing up to the 1,800 level almost. And then that breakout, once that happens, boy, you want to be in.
I totally agree, and I'll tell you what I'm also encouraged about with today's price action as we record on Wednesday is the fact that it's holding. Last Friday we saw a similar bounce, and it didn't hold. Platinum and palladium held, but gold and silver got just absolutely crushed in a matter of minutes and came right back down. So I really thought Friday, the day after our last show posted, was indicative of what we're seeing today, and it didn't quite materialize like it is today. I want to go back to last week, though. You talk about this upside range here. And some of what we alluded to in this image here, you see that short-term 50% line in the medium-term 382 fib right at the 1770. So that's what we were calling for as sort of a magnet. We were around 1758 as we recorded and hovered there all the way really up until about yesterday. And so to break through strongly that 1770 figure, and then you'll see here that short-term 382 fib being at that 1840, which you just had mentioned as a potential resistance point to the upside. But what Robert's saying is this is just a channel. This isn't the big breakout. We'd have to see it close, I think, above that. So that's one thing. The other thing is that we've crossed the 50-day moving average, and now we're nearing that 200-day moving average. We don't talk a lot about that. David McIlvaney was mentioning it today. And that 200-day moving average is right at 1799.80. Today, as we record, we're at about 1794. And that 50-day moving average we blew right past at 1778.50. So again, strong numbers, but I hope this chart lends some clarity on what we were talking about last week.
Yeah, you mentioned the Friday action with gold. It pushed up to like 1780 and then just came right back down. It seems like a little bit of a head fake. You've picked up your dribble. You're going to shoot, but head fake up, not yet. Somebody may not have just wanted it to rise yet, but it was obviously pointing toward higher numbers, and here we are middle of this week, and it's broken clearly straight through there. So it popped up, and now it's even higher than where it had peaked there. It's headed higher. I don't know what else to say except you better be buying metals in this range because it's like what I've seen over the last 20 years, the past two crises that we've seen in the 2 years, 9/11, 2001. Gold's not come back down to that level. It's way higher. 2008 crisis, hit another floor, hadn't been back down to those levels. And I think that's where we are here. We're in a crisis in many ways, not just the obvious one with the virus, but I mean, we're in a trust crisis. And when you have something that big, that you're breaking down trust all over the place, it creates so much uncertainty, so much non-committal into the markets. But in this case, you have a commitment of traders report that's showing nicely with traders moving into metals and commercials as well. So you have a perfect storm type of scenario with, I would say, a bigger crisis that we're just living through it day to day. And the financial aspects of it are going to be severe. You're going to have people trashing markets, like look at the Chinese bond market that Dave McElvany was mentioning to us earlier this week. Look at these crises. People are going to get real about what they think is a better place to put their money. What do they have confidence in? And so I think this is what we're going to see over the next coming years with gold. And here in the short term, we may just be ready to break out of this level and move higher. So I wouldn't be waiting. If we were to see a pullback from somewhere in here and not have a breakout above 1830, you could possibly see some lower numbers. I'd love to see that because it delays the inevitable of it moving higher and it builds more of a base and more potential energy. But if we don't, you just want to be in. So I would put it as you've got another maybe 2.5 months before it's over for your opportunity to buy gold in this range. And it may be here in the next 2 weeks that it's over.
The end of the year thing is real. You tend to have a post January 1st reality of when prices really start to move. And yeah, waiting, you may not even see the price you're looking for because, again, it may be in the Asian market, it may be in the London market, and you may not be awake for it. To me, that COT report, you're favoring the commercial interest. That big money tends not to be wrong. They know what's coming, and it does not bode well. In fact, it bodes negatively for the U.S. dollar. And the only thing that's propped up the U.S. dollar as of late is the severe weakness in the yen and in the euro, right?
Absolutely. That's spot on.
So what do you see in terms of the dollar price? I mean, we've called for a potential 96 hit on that dollar index. We've been stuck between 94.05 and 94.5. What are you thinking there? Are your eyes on the dollar? Or are you more on the word you used earlier, and that is the uncertainty in every other market?
Well, I'm more confident in what gold's going to do is head higher. More confident with the metals picking up a big wind in the sails and moving higher. As far as the dollar index, I mean, I think Europe's going to obviously affect it and some of the other currency markets. And so it wouldn't surprise me to see maybe one last gasp higher, one last like final move into the 95, 96 range. It's not going to hold there. I also wouldn't be surprised to see it not even get to that last push higher, because I think even if it does that, it'll be a really quick move to just kind of wipe out positions and open orders that are standing there. So I think the dollar rally may be pretty much done. If it does have this last move higher, I don't think it's going to last in the 95, 96 range. And I don't know that that puts much downward pressure on gold because it hasn't in the last times that we've seen the dollar rallying. Gold hasn't created a new low, whereas the dollar's created a slightly higher high. So you have a big turn coming with the dollar moving lower, gold and silver headed higher. And I think that we're right at the cusp of that happening. If it's not right here in the next couple of weeks, you've got 2 months. That's it.
Yeah, I call it a sense, but I totally agree with you. And we've also talked a lot on this show about this C wave incline. So we've had an A wave climb, a B wave decline, and we're waiting for that big run up, and that is the C wave. And it's a matter of when do we put the floor in? Was the 1680 the floor? We'll have to see. So far, so good. We're up $100 plus from there. This could potentially be that C wave climb, and those are the ones that set the new all-time highs.
You don't want to miss that.
No, you don't want to miss that. So be in on the front end of that. But Miles put up a great chart last week as well on silver. Remaining bearish in terms of this short-term correction, but he's got these 3 blue arrows, which so far so good. That was 22.59 when we recorded last week. We hit 23.44 today, up about 90 cents. We've come back down a little bit to 23.11, but that's a really good image for you to remember too. If that 22.10 or so can hold as a support level there, that bodes well. And the white metals are starting to wake up again. Platinum's doing some similar action in response to, again, there's now this broad-based inflation concern. So we've got uncertainty as Robert's word of the day. Let's pick a couple other words of the day. Let's go with the next one being inflation. All this talk about inflation, lo and behold, the cost of living adjustments for Social Security just came out today. And in 2021 now, they just boosted the cost of living adjustment by 5.9%. And that doesn't sound like much when you hear, well, that's the inflation rate. That's generous. That is huge. You've got to go back to 2008 at the time of the economic crisis when they increased at 5.8%. So this is bigger than even then. You've got to go all the way back to 1982 before you find a number that was bigger. And 1982 was the tail end of a bunch of 8, 6, 5, 6, 10, 14%, 11% run. And we all know what was going on. That was the 70s. And that was the last time we hit not only inflation, but it was measured accurately back then as well. They've changed the way that they measure it now. So the 5.9% to me is an indication of them grasping the enormity of the situation, the sensitivity politically to the current monetary and economic system, as well as the fact that they know that the true inflation number is higher than that. We know it's closer to 13%. But what else was going on in the 70s? It was economic downturn. So unlike 2008, where the economy was able to rebound and really take off and got super hot and has remained hot, what we're facing now is inflation with economic downturn. That's totally different. That is the definition of the third word of the day, and that is stagflation. So stagflation is this persistent high inflation, which with the cost of living adjustment, they just admitted that this is not transitory. This is persistent. And that persistent high inflation gets combined with high unemployment and stagnant demand in a country's economy. We have a little bit higher demand, but we have supply chain disruption. But that absolutely is driving down the economic activity. So we're witnessing stagflation. What's that caused by? Cost push inflation. So cost push inflation occurs when some force or condition increases the cost of production. So in particular, like an adverse shock to supply, which we're seeing in shipping and we're seeing in supply chain disruptions in manufacturing, certain parts, computer chips, that sort of thing. But that can be indicated by an increase in oil prices. For example, we're seeing that as well. So you have all these things like this perfect storm creating stagflation. Well, what does gold do in times of stagflation?
So what? Stagflation. What does that mean? What's it mean to everybody listening?
It means, one, put on your seatbelt. Two, it means gold's getting ready to do what gold does best. It does far better in times of stagflation than it does in inflation. People have knocked it as not being a perfect inflationary hedge. That's correct. It's not. But I'm telling you this, it's a perfect stagflation hedge because it's going to go back to your first word of the day, uncertainty. You don't know when it ends. You don't know when things get flowing again. You don't know what it's going to take. You don't know how much they're going to spend. You don't know what political fallout there is and instability caused from that, whether it be midterm elections or recall votes or anything like that.
So what? Stagflation. So what? Well, the so what is performance. What do you want to own in a period of stagflation? And I think there's good argument to be made that we're going to be stuck in this period of stagflation. It's not just a one-off number with this cost of living adjustment.
Right.
We're
was
there.
A multi-year event.
Multi-year event. Continuing. Where does it end? Total destruction of the dollar is probably where it's going to end. But in the meantime, so what? Stagflation. What's the numbers look like? Well, gold has been the best stagflation performer. You compare it to equities, treasuries, the VIX, whatever you want to compare it to, and gold's the winner, clearly. So gold being the best performer in stagflation. Outside of that, what else do we have? We have huge systemic risk in the financial system right now. And gold price tends to increase in periods of systemic risk. We could list 50 to 100 more reasons for owning gold in this period, but this is not a time to really dilly-dally and wait around, see what happens. Maybe you catch a downdraft of $50 down an ounce. Forget that. I'm not doing that personally. I've committed to owning metals because of the environment we're in, with the economics of it, with stagflation, systemic risk, you name it, privacy. I mean, if they're going to look at wanting to see your bank records of what you're spending over $600, why don't they start with themselves? Of what positions they're holding while they're holding an office and have some conflict of interest transparency. Why don't we start there with who's doing that first?
Yeah, that definitely has repercussions as well. If they were to open that up and be able to see behind the curtain, that would also add to the political and social instability or uncertainty. With that, I hope the strong takeaway today is, look, everything has shaped up beautifully for this moment. You are most likely a precious metals owner. Are you adding to ounces? There's nothing changed necessarily in terms of ratios, so we're not swapping any product for another. That's just not indicated yet. You're facing a welcome opportunity price-wise to get your IRA moved, get assets parked very well, methodical, planned money is moving into the metals with prudence here. And these charts hopefully will lend some credence to exactly what those motivations are. And if that's not working, then just let the cost of living adjustment be the big shout from the rooftop admittance by the federal government that inflation is here to stay.
Yeah, I want to mention one more thing before we jump off today. You mentioned charts. I noticed in the platinum chart, platinum has made a nice recovery and moved back above 1,000. And in the platinum chart, there was a really beautiful geometry that happened that is a fairly high probability geometry where it just, this last move up above 1,000, it completed this move to show the turn on it. And if you compare that to the silver chart on a little bit longer term basis, a few months extra added to that silver chart versus the platinum one where it created the geometry, you have the exact same geometry happened in the silver chart. And it has not yet made the move to finish this move higher. I'm going to take some leeway and say, yes, that's probably going to happen because it's lending credence to what potentially will happen with silver. If that holds true and it follows the same pattern as the platinum chart, that puts silver very quickly back into like $25.50, $26, which it's headed that way today. So I think that's going to happen. I think we're having the turn made right here. So
both in silver and in platinum.
Absolutely.
Okay.
And things can come out of the woodwork. You could have another downdraft. It's a market. It can do anything. But the chart on platinum is showing the same type of thing as what the silver setup is on this turn and headed higher. And it would put silver very quickly back to 25, 26, which would make physical silver 30 plus because the silver premiums to actually get real silver is already $26, $27. So I think that's corresponding a lot. We see a lot of overlap between the different metals movements. We try to watch one versus the other and see which one might be leading. Platinum may be leading here, but silver, I think, is going to be headed to 25, 26 very quickly. And that just picks up momentum and probably shifts it way higher. So we're at the turn, whether it's in the next 2 weeks or 2 months, you don't want to be waiting.
Yeah, and on that note, we're going to throw this image up again that we alluded to last week with that 1,050 being a potential resistance point. And boy, we just shot almost unhindered, almost there. So keep your eye on that figure in that regard. And per Robert's breakdown here, ask us any listener questions we're going to read. So ask us questions on these technical analyses or any of the fundamental discussions that we've had. And as always, we appreciate you returning and listening to Golden Rule Radio.
Yeah, we can only go so far on the show, relative to what your own personal portfolio might look like and advice there. We can only go so far to put this out in general terms. So I think it is best to give us a call, talk to us individually, walk through some details. We get more in depth in conversation when we're on one-to-one phone call. So give us a call, 800-525-9556. Our website, McIlvaney.com. You can find us on Facebook, McIlvaney Financial, Twitter, ICA Gold, and hit the subscribe button below to like and subscribe.
Thank you so much for listening. Have a great week.